Everyone's watching Bitcoin, but few are paying attention to what's powering it behind the scenes. That's where the real opportunity might be hiding. CORZ Scientific, ticker symbol CORZ, could be one of the most overlooked crypto miners in today's market. While its peers chase short-term headlines, CORZ is quietly staging a powerful comeback. After emerging from bankruptcy, the company has retooled its balance sheet, scaled its infrastructure, and is making a bold pivot into AI-powered data centers. In a market that rewards scale and innovation, CORZ Scientific might just be the surprise winner of the next tech cycle. Welcome back to Stocks Telegraph, where you get the latest financial market news and updates before they go mainstream. If you're bullish on the future of crypto infrastructure and emerging AI plays, hit that like button, subscribe, and ring the bell so you never miss a deep dive like this. CORZ Scientific is one of North America's largest publicly traded Bitcoin miners, operating roughly 20 to 24 exahashes per second of hash rate across 7 U.S. data centers. But the company is no longer just a crypto play, it's evolving into a high-performance computing provider. Since exiting Chapter 11 bankruptcy in early 2024, CORZ has trimmed the fat and now stands on a cleaner balance sheet, with a renewed strategy that extends far beyond mining. It's now striking long-term deals to support AI infrastructure, offering both upside from Bitcoin's rebound and recurring revenue from enterprise compute contracts. Unlike traditional miners that rely solely on self-mining, CORZ operates a hybrid model, combining self-mining with client-hosted operations. It owns facilities across Texas, Georgia, North Carolina, Kentucky, North Dakota, and Alabama, with more than 160,000 ASIC miners deployed. Around 4% of its total hash power is rented out to third-party miners, creating diversified revenue streams that reduce risk and enhance scalability. The 2024 Bitcoin halving slashed block rewards in half, squeezing margins across the mining industry. But as always, the well-capitalized and efficient players emerged stronger. Miner revenues dropped initially, but rebounded by 42% heading into the fourth quarter 2024, according to Coin Metrics. CORZ Scientific's size and efficiency, especially its ability to modulate power usage based on grid demand, gives it an edge in this more competitive environment. History favors miners like CORZ during post-halving cycles. Typically, BTC rallies within 12 to 18 months after each halving event, driving disproportionate gains in miner stocks. With scale, efficiency, and operational flexibility, CORZ is well-positioned to capture this leveraged upside. January 2024 marked a turning point. CORZ Scientific exited bankruptcy, converting $400 million of debt into equity and eliminating around $60 million in annual interest obligations. It quickly relisted on NASDAQ, raising $55 million through an equity rights offering. Existing shareholders retained about 60% ownership, reflecting confidence in the restructured business. Since relisting, the company has set a multi-year growth plan into motion, expanding mining capabilities, deploying new hardware, and scaling AI hosting services. Despite an initial 30% dip in its post-bankruptcy stock price, this reset positions CORZ to win long-term. The market may have been cautious at first, but the company's balance sheet is stronger than ever and its strategy more focused. CORZ Scientific is betting big on AI, and the numbers back it up. Its new Auburn, Alabama facility received a $135 million boost to support 16 megawatt of AI capacity, with total projected investment nearing $400 million. In Texas, the Denton site will deliver another 200 megawatt of high-density hosting under a $1.2 billion deal with CoreWeave. Combined, these projects underpin over $10.2 billion in long-term revenue across 6 locations. What makes this pivot so compelling is its energy strategy. CORZ collaborates with grid operators to schedule AI compute during off-peak hours, supplying surplus energy back to the grid when prices surge. This not only cuts operating costs, but also improves ESG credibility, an increasingly critical factor for institutional investors. Revenue data shows the shift already underway. In the first quarter 2025, CORZ's self-mined revenue fell from $210 million to $67 million year over year, while colocation and AI hosting revenues rose sharply. Stable, long-term contracts are now offsetting the volatility of crypto cycles. CORZ Scientific's biggest hidden asset? Its infrastructure. The company owns massive energy-dense facilities that are now being transformed into AI compute hubs. This dual-use capability, mining plus AI, gives it a structural edge. The 12-year hosting deals with CoreWeave include 500 megawatt of capacity, worth $8.7 billion in committed revenue. That level of long-term stability is rare in either the crypto or AI space. Importantly, CoreWeave also made an acquisition offer to take over CORZ's infrastructure assets, a strong signal of institutional interest and validation of CORZ's strategy. These moves show that Core Scientific is no longer just a miner, it's becoming a hybrid infrastructure company, straddling two of the most explosive sectors in tech today. Still, this pivot comes with challenges. Despite diversification, Core Scientific's earnings remain highly correlated with Bitcoin prices. Volatility in BTC, especially after a halving cycle, can pressure margins and stall investor momentum. Energy costs also remain a concern, especially in high-demand states like Texas. Regulatory scrutiny around crypto's environmental impact could further complicate long-term operations. There's also execution risk. Transforming from a mining firm to an AI-focused data company involves steep capital costs, technical upgrades, and performance benchmarks that may stretch the company's existing expertise. Enterprise AI clients expect high reliability and uptime, and any misstep could erode CORZ's credibility in this new space. But the upside? It's huge. Core Scientific's dual revenue model allows it to benefit from Bitcoin booms while locking in stable income from AI hosting. This combination of high beta crypto exposure and long-term, predictable AI revenue makes it one of the most dynamic stories in the infrastructure space. Post-bankruptcy, companies often outperform as investors realize the value of cleaned-up balance sheets. CORZ fits this pattern perfectly. It owns its data centers, has locked in long-term contracts, and is building a reputation in a new growth market, AI infrastructure. For investors looking for the next 10x story, CORZ brings together scale, recovery momentum, asset ownership, and market timing. If BTC rallies and AI demand continues to surge, few companies are better positioned to capitalize on both trends simultaneously. Core Scientific isn't the same company it was pre-bankruptcy. It has re-emerged with stronger financials, deeper infrastructure, and a forward-looking strategy. The question now is whether the market will catch on before it becomes the next RIOT or MARA. With its discounted valuation, dual growth model, and interest from companies like CoreWeave, CORZ may be one of the few crypto-related stocks that also ticks the box for AI exposure. It's a play on digital gold and digital brains wrapped in one. Now it's your turn. Are you tracking Core Scientific's pivot, or are you sticking to the bigger crypto names? Drop your thoughts in the comments. We'd love to hear where you stand. Thanks for watching Stocks Telegraph. If this breakdown opened your eyes to a hidden gem, hit that like button, subscribe for more deep dives, and ring the bell so you never miss what's next. Until next time, keep looking beyond the headlines. The next breakout might just be hiding in plain sight.